Do you own an investment property? Are you managing your own investment property? If so, then this video is for you. Why? Because you spend a significant amount of time doing real estate related activities. You may be eligible for a tax status called real estate professional. This tax status alone could save you tens of thousands of dollars every year when you file your tax return. So today we're going to talk about number one, who is the best candidate for this tax status. Number two, how you could qualify to be a real estate professional. And as a disclaimer, before I get into it, I am not a certified public accountant. I'm also not a licensed attorney. If you have a specific tax questions or legal questions, please consult your CPA and your tax attorney. So here is what a real estate professional is from a tax point of view. To qualify, you need to perform more than 50% of your personal services and spend over 750 hours a year in real estate related trades or businesses that you materially participate. Achieving this status can be beneficial, allowing you to group all your real estate activities for non-passive treatment. This can help you deduct losses or avoid the net investment income tax. Your activities actually generate income. To meet the material participation requirement, here are the few things you must pay attention to. You must participate in management of the venture on a regular basis. You must make management decisions and activities such as selecting tenants, approving leases, overseeing repairs are very legitimate activities in this category. And you must provide significant services in this business or trade. When it comes to your rental activities like creating or responding to rental ads, managing the properties, handling day-to-day operations such as attending to tenant complaints, attending to repair calls, responding to tenants' questions can all consider activities that you contribute to provide significant service. And you must participate in the venture's operations. Activities such as inspecting the property, collecting rents, those can all be considered participation in the venture's operations. So all in all, if you're an active landlord, if you are managing, coordinating, actively participating in the management of your rental property, you probably could qualify for the real estate professional. Just make sure you document your hours in case you get audited. You must document that you participate in those activities more than 750 hours a year. However, if you don't qualify, don't panic. You still can qualify for active participation. And what an active participation is a lower standard of involvement than material participation. And that is more common among individuals who want to leverage the participation to allow for special passive loss rule for rental activities. You may be able to deduct up to $25,000 in passive losses from your rental real estate each year against non-passive income. However, that $25,000 special allowance is reduced by 50% if your annual gross income exceeds $100,000. And that amount is reduced to zero if your annual gross income, AGI, reaches over $150,000. So to qualify, the following rules apply. You must own at least 10% of that real estate venture and have substantial involvement in managing the rental. And you cannot be a limited partner in this real estate venture. The amount of loss eligible for that $25,000 tax allowance is determined by netting income and losses from all the rental real estate activities in which you actively participate. No matter what business activities you invest in, it's important to be able to document your level of participation in each activities to accurately support your tax position. And this is very important in case you get audited. You want to be able to show your auditor that you actually are working on your real estate activities. You're actually allotting time in management, in responding to rental ads. So make sure you document correctly to support your position. The application of these rules and elections are generally dependent on each individual's specific tax scenario and should be address with your own tax advisor and CPAs. Let's talk a little bit about what kind of write-offs you could be qualified for. If you meet the requirement of a material participant or an active participant in your real estate professional status, you could deduct a lot of activities, very basic ones, all your communication costs, your cell phone costs, your internet costs, your home office costs, your transportation costs, which includes gas and mileage, tolls, parking, as well as your insurance, vehicle service fees can all be deductible. The other big deductions is business-related meals. If you conduct business and have a meal, that could also be a deduction. Also, travel is a big one. When you conduct business and there is travel involved, and when it involves airfare and lodging, if you could justify that those expenses are incurred while you conduct your business venture, those can also be deductible. So there's a lot of deductions you could potentially take if you qualify as a real estate professional. Now you know how crucial it is to get your tax status right when you file your taxes. If you want to learn additional strategies on how to maximize your tax savings, watch these videos here on how to avoid capital gain taxes.